Hello and welcome to my new show, The Buck Stops Here. I'm Catherine Murray, and I'm very excited to be joining the News Forum, where all voices matter. And now I'm very pleased to welcome an old friend, someone who I have interviewed for many years, known as the best trader and banker on Bay Street, TV personality from the Dragon's Den, and more recently, a VC investor, Mike Wekerle. Mike, welcome to The Buck Stops Here. Great to see you.
Thank you very much, Catherine. I want to thank you and congratulate you on the new show, The Buck Stops Here, on a Perspective Channel News Forum. I think they couldn't have picked a better person suited for this specific role, and you are the quintessential professional in my view.
Well, thank you. And I do remember the first time we were on TV together. It was your first time, and it was quite an experience. We'll get to that in a little bit, but.
Yeah. There's always been a great conversation that we've always had. Our TV conversations always started and finished with, I would say, very captive comments.
Absolutely. We'll have to fill people in on what that meant. But let's get caught up a little bit for our viewers in terms of, my goodness, how things have changed. And, and just looking at the pandemic and the policies surrounding the pandemic. And, I think one of the things that you're so focused on are the haves and the have-nots. But just kind of give us your overview in terms of what's been going on.
Well, it's great question. And what I look at right now, I am the owner of the Mocambo. I am the owner of a bunch of properties in Waterloo, and I can get back to that later. But my perspective here is that what's going on in this pandemic has been extremely devastating for any small business, any small venue. I've spent time talking to the likes of Ted Nicolau and Mark McEwen of McEwen Foods, people like Ray from Dimmies. And I believe the reality of what's going on here is that we are pushing ourselves into a panic position where we're not opening up quick enough, first and foremost. COVID-19 is the most used 7-character word these days, other than variant. It's been devastating. The U.S. herd mentality has had more active cases, but I believe that the statement that has come back to me is that this is going to stay with us for a long time. We have to learn to live with, as we have learned to live with the flu, the cold, and other things that would have started as a pandemic and ended up as an endemic. If you look at what has happened. There's an article put out by The Atlantic on August 17th, 21 by Sarah Zhang that talks about that we have to adapt either by getting vaccinated or infected. I prefer the vaccination side. And that's for me. And there's studies that go back to the 1980s in England, a follow-up that came through that showed that this also has the way of morphing into different types of variants. And, every single year, between 21,000 to 65,000 people die of the flu each year. And that is the normalized flu. I don't think that's going to change. Stepping into business, again, I think it's been both emotional dollars and physical dollars draining. The physical dollars are very easy to understand. The ability for the government to compensate for the lost business is great, but it's going to be very painful in the long term. A lot of debt is occurring, not just in governments, but on individuals. And the long-term effect has now had forced a lot of the hospitality industry to shut down, to never reopen. And a lot of venues, having been, one of those venues that was to open 1 month before the pandemic started, roughly 20 months ago. As Ronnie Hawkins said, if I didn't have bad luck, I'd have no luck. But in looking at what we have to deal with today is twofold. The amount of closures coupled with a workforce that has been now sidelined for so long that their motivation to come back is not there. Their motivation to work outside of normal working environments, i.e. the black market labor market, where they're getting paid cash, is now rapidly growing. And that's at the same time as you look at all the types of business are now seeing a very hard time to staff their venues, staff their restaurants, staff their stores, as it's now not a job that is paying what they believe they can receive from unemployment insurance or CERB, in addition to what they can do on the side. It's been a changing atmosphere. It's a very poor policy decision to not have people back to work and not to have the businesses open. We've seen the success of the US in the areas where they have kept it open. Yes, there has been increased COVID cases, but hospitalizations are going down.
Mike, it's interesting. You just mentioned that the policies for the pandemic, really are now negatively impacting the economy. You talk about an underground economy, an underground job force, essentially. Give us some real life examples, in terms of what you're seeing. And it's just so interesting to kind of repeat the fact that, you've worked on Bay Street, the big banks, making a lot of money, and now you've pivoted more towards venture capital and smaller businesses. So you really do have a view on both sides here. What are you specifically seeing on the real estate front, commercial? What's Google doing? Just give us some of those examples.
Sure. I think it all has to start with the policies that are put in place and have been long-standing. We are sitting here with interest rates at the lowest point they've been in 100 years. Yet we have the have and have-nots. As you look at the way the banks operate, and this will go dovetail into real estate because I'm personally affected by it, is that when you have commercial space and you have cap rates, the banks lend against that. There is a limited group of large banks, and we know who they all are: the Royal Bank, Bank of Montreal, CIBC, Bank of Nova Scotia, et cetera, et cetera, et cetera. But they are earning significant profits in this environment, billions of dollars per quarter. So this is a multi-billion-dollar industry that is profitable. Yet, when you look at the division where once you have vacancies, and now Google, for example, in Waterloo, have mandated 30% of their staff to work from home. And that's on a permanent basis. Occupancy in Waterloo has gone to the highest vacancy where it's ever been in my time in Waterloo, which has been over 20 years, and that's about 25% currently. I believe that right now we are running now at occupancy at just over 50% in some of our buildings, as a lot of businesses either had to shut down or they're continually to work from home. This has been very straining, and you can't get traditional bank financing. As I tell people, when you don't have bank financing, you have only one other choice. It's 2% money or 12% money. And that is very difficult to operate a business that's on the decline. That is a policy that we need to have intervention. There has to be an ability that we not only allocate capital to people in the form of CERB or others, but offer small business loans, offer the ability to reopen this economy where the government has to go there and force the banks to lend money, not just on numbers. You can't give someone an umbrella when it's sunny and take it away when it's raining. And I think that's the big issue here. We're seeing the supply chains have been disrupted. The economy is seeing a push in prices due to the fact the supply chains. Plus, if you look at gasoline prices, they're up 40% over the last few years. This has been a disaster. So we're looking at inflation coming up rampantly. We discussed earlier, the term of inflation, it's the highest in 10 years, I believe.
Yes. Well, so Mike, let me just ask you about that, because it's been all over Twitter over the past 24 hours or so because of the inflation numbers. During a press conference, the Prime Minister Trudeau was asked about the inflation, and his response was, "I don't think about monetary policy." That was when he was asked whether monetary policy needs to be considered at this point, given we've seen the highest inflation numbers in 10 years. I think that's shocked a lot of people. Now, at the same time, do people care? Do they really know what this might mean to them? What do you think this should mean to people?
Well, I think it's totally unacceptable to make that comment. I've been in business since I was 18 years old on the Toronto Stock Exchange floor. That's 40 years I've been in business. We are in an environment where it's extremely difficult to understand why we are letting inflation and money supply, which historically has been a very key factor, and the ability to not curtail what we believe is going to be cost-push inflation. Wages are being pushed higher. Productivity is going lower. Basket of food prices are going higher, 20 to 25%. Automotive prices now are sold out. You can't get a boat, a training bicycle, or a pair of skis because of supply issues. And if you can, They're actually at a premium to what they would have been. At the same time, debt is rising in everyone's pocketbook. And I believe that the big bubble that I think that the government will have to address, and they're not even addressing it because of inflation, is the housing bubble that will come out of this as well. If you look at a 1 or 2% move in a mortgage rate for the average person, that'll be devastating. It'll have the effect to put downward pressures on houses, which will then have the pressure to put up more capital to then meet your criteria of loan to value. And I think that is probably the most interesting and most tough time that people are going to see when they start seeing their sole asset of their house start declining in value when everything else is running.
All right,
we need to change the policy.
We'll pick it up on that point right after this quick break. There's a lot to unfold there. Welcome back. Mike, I do want to pick up on a point you just made surrounding the housing market. I think a lot of people feel pretty good about themselves if they bought a house or a condo or what have you. But you're essentially suggesting that beware. Beware
is with a capital B.
Why?
Taxes will be going higher. We are spending over $600 million on an election that should not have been called in the middle of a pandemic. That's taxpayers' money, number one. So over term, for our children, our grandchildren, taxes will have to go higher to pay down the debt because we have accumulated a significant amount of debt over the last 20 months, as is every other country. And there'll be a lot more to carry forward as we're going to see this continue on, and hospitalizations will decrease, but it is still quite expensive. And now moving into just where we believe, how do we restart this economy and what is going to be left? And in the environment of higher pricing, higher wages, higher inflation, lower growth, what is the natural reaction to inflation? Is higher interest rates. A 1 or 2% rise in your mortgage rate, it'll be devastating. It'll reset housing prices. It'll reset the amount of deposit that has to go in as per what the agreement with the banks are for their loan to value. And cap rates will start to go higher. That means rental income, rental prices, apartments, they'll go higher. So we're putting ourselves in a position where it's going to be 1970s potentially again.
And you don't think that the banks will be too friendly if, in fact, that occurs?
Well, I don't think they've been friendly yet. I don't think they've been open to loans. We've tried to go for small business loans. We had seen some progression. A lot of my friends have applied for the small business loan. It's very timely. I know it's backed up with under COVID, but other countries are restarting their economy. They're putting money in their hands in the form of loans of small business. I just don't see our country doing it right across the board. And I need to really reemphasize that this is a team effort. This is government with private industry, i.e. the banks and lenders, and then the partnership with the entrepreneurs and the business owners. We have to work as one if we expect a fighting chance to get this economy back going.
So what do you think that means in terms of what people need to be thinking about as it relates to the government leadership and, maybe who they're going to go vote for?
Well, I think that, what you have to look at is what the policy is. The fact that Trudeau had said that he doesn't believe in monetary policy, well, that's a pretty easy decision because that's the biggest factor right now, as well as with the pandemic, that need to be addressed. Yes, I believe in climate change, but you can't pay for climate change issues or changes without having capital coming into the coffers. So if there's no taxation and we're not growing this economy, then that will be a problem as well. So we have to make sure that we're a safe country. I'm involved with a company called Evergreen, which is taking organic waste and separation waste and turning it into energy. Very green, very exciting. But these are the areas that I think that we can provide public and private sectors to grow on. Mm-hmm. In the bank sector, we have Wealthsimple and a company I'm involved with called Mogo. These are non-traditional digital banks. We have to take the cost out of the system, the high fees and charges, the higher taxation that will continue to come down our way, and replace it with low fees, lower taxation, and give the population a chance to come back to this world and have a fighting chance. The population needs to pay down their debt. So in the event there is a housing crisis, which I truly believe over the next 2 to 4 years, it will come to fruition. then they have a chance to not be in a situation as we saw in the US in 2008 to 2012. Because what happens, you're forced to sell at ridiculously low prices, which is currently the scenario in the commercial market. This should be a time people should be buying. But capital, including myself, have been waning here. And, I'm in a position with vacancies that I will have to sell some properties. So I'm very disappointed on the policy that we've taken so far to date. I think business needs to be put forward, and the private and public sectors, i.e. the federal government and the banks of Canada, have to work together to create programs to restart the private industry. And I just don't see it. I think that is bad policy. We need someone who is pro-business and pro giving people a chance.
Yeah, pro giving people a chance, pro Canada, all voices matter.
Pro Canada.
Mike, and it's interesting, everybody's got to remember, I mean, you come from the banking system, and
Yes.
you've benefited from it as well. So as have I. But the point is you want a fighting chance for everybody. I also want to just mention, Mike, you said that Trudeau said he didn't believe in monetary policy, not to correct you, but he said, I don't think about monetary policy. Maybe
Okay,
it's the same.
sorry.
No, just so we don't get, funny calls. But
I agree.
We're going to leave it there. We'll pick it up right after the break.
Thank you.
All right, welcome back. Mike, not to bring up the word inflation again, because I don't want people's eyes to glaze over. We're fun people, but it is the word of the day in addition to COVID, that is for sure. And I want to give you a chance to respond to again, what Trudeau said as it relates to inflation.
Well, I believe that I don't think about inflation is the same as not caring about inflation or not thinking about it, not believing that it's out there. So I don't think about inflation. If that is the correct interpretation by me, I shake my head. I think that is unacceptable. And we do have a problem in inflation. It's 10 years in the going, and it doesn't go down. Interest rates aren't going lower. It'll affect our dollar. It'll affect our economy. And it'll affect everyone's pocketbook and how they spend.
All right. I appreciate that clarification and your view in terms of how you do like to word it. Mike, let me ask you, though. I mean, I've known you now for so many years. You are a very positive person, optimistic person. You've kind of painted a little bit of a gloomy picture. So why don't you address that and maybe stagflation and really how you're positioning yourself given the scenario that you're kind of looking at?
Well, it's a very difficult time. So yes, I do. I spent the majority of my 40 years in business in the financial industry. I've raised a lot of money for companies. We built a great franchises, and I'm very happy to be a part of that. However, in looking at where we are right now, I'm very suspect of the housing market. As I mentioned earlier, I believe interest rates will go higher. I believe that mortgage rates will go up higher. I believe that people who have floating mortgage should fix their rates and make sure they can protect their investment, because one of the things you can understand is if you know how much you have to pay out, you know how much you have to make. One of the things I'm doing right now is I'm working extremely hard. As I tell people, I don't think I've worked harder in my life and have had less money in my life. Mucho trabajo, poco dinero. And I believe lots of work and less money. But I believe the outcome of that is going to be, emotionally stronger. But there's two types of dollars: economic dollars and emotional dollars. For someone who has been a big supporter of CAMH and have, gone down the path and have battled with anxiety and depression, as I think it's a topic that everyone should be open about. Everyone is going through that right now. The last 20 months have changed lives enormously, from being out of work, being out of schools, being locked in your house. It's been an extremely emotional, tough time. So what I am trying to do is get out and make sure that people understand you need to get out and work. You need to get out and have exercise. You need to make sure that you keep your environment safe. You need to make sure what is appropriate for you to deal with this pandemic or future endemic. You do. And I don't think that, being forced in anything is going to be the task, but we're starting to see a kind of approval process in the US that they are going to be vaccination cards for major events like Lollapalooza. There are going to be vaccination proof for the and there'll be vaccination proof from MLSC for the Raptors and the Leafs, and also for large events and concert venues. Whatever is acceptable to move forward to keep it safe, I think is important. We have a lot of young children in the society and older parents in the society, and all people need to be kept safe, and all people do matter.
And,
So-
and Mike, the program, of course, is called The Buck Stops Here. You've kind of said it, but wrapped into maybe a few words. What's your buck stops here?
Well, the buck stops here right now. Everyone has to start to save, pay down your debt. If you're looking to invest, I think the stock market's at record highs. I'm dubious of the stock market. I think that the big investors have been in the banks, and I would move into something more of a digital bank. I'd move into a fintech. I do believe Wealthsimple just raised some money on the private basis. Mogo I continue to invest in. And there's a host of companies in the US like Robinhood that I think have momentum as we change the way people look to invest. As far as the other areas, I think big tech still remains to be the stronger, especially in the POS systems. And last but not least, the big box stores. Look at Canadian Tire, companies that can operate on a per square foot and provide an online product that is excellent. That's where I'd be going. As far as thematic investments going, I'm looking at green investments, primarily in the energy regeneration side, which is taking organics and turning it into energy. A company just went public on the Vancouver exchange called Evergen, just went public. Chase is a smart guy, and he's got a great team.
Okay.
And I would look at the hospitality sector now, because I do believe there'll be a strong recovery back into it.
Okay.
I was just looking at Indigo and seeing how strong their online numbers were. So those are some of our ideas where the buck stops here. But more importantly, we need to change policy.
Thank you so much for joining me. I hope you enjoyed it, and certainly stay tuned for the next edition of The Buck Stops Here. I'm Catherine Murray.